Okay, so let's get going. So again, Acumatica training class day today, and today we're going to be talking about month-end processes. A lot more of a lecture style rather than a show and tell, although there will be some show and tell in Acumatica, but it's talking about the processes that we want to follow for month-end in Acumatica. Okay, so for those that are new to our training classes, we have weekly training classes covering different topics. Those training classes are for central nervous systems clients only and are available at acumaticaengineering.com/acumatica-training. So today we are going over month-end process and financial closing procedures. Next week we've got approval maps, and then we have some CRM marketing uh, class on June 8th. Every class is recorded and available to you on demand, and that can be found at acumaticaengineering.com/maintenance-classes. Useful for those that cannot make our session or you have joined us and would like to replay certain aspects of it. So going to that site will give you the recordings for our previous classes. Give us a couple days to get that up onto the website. Now, this is an interactive session, so questions will be answered at the end of the presentation. So this is what makes it a little bit better than just saying, well, you can go look at it on demand. You being able to listen, ask questions, and have those questions answered, and certainly be able to help out other people with questions that they maybe are too shy to ask or haven't thought about, and you're helping them out. So questions will be answered at the end of the presentation. Please submit questions using the question box um, on the meeting bar at the bottom there. We'll answer as many questions as we have time for. For questions that we don't have enough time for, we will do a video with those answers on our blog, and also reach out to the person that asked those questions and answer those questions directly with them. And to check out our blog at acumaticaengineering.com/engineering-blog. So what are we going to be talking about today? As part of our month-end procedures is talking about developing a discipline, defining the plan and schedule for month ends, going through the closing procedures, talking about the financial subsidiary models, AR, AP, cash, and fixed assets, and also talking about other modules like projects and tax, sales tax, which are um, have a different flow for them. Okay, so let's begin with you know, what is key to making month end successful? Well, that starts off with developing discipline. So need to work with the management team to set objectives. That is key. What are the objectives that we need to have? So what they require, when they're required, etc. And so working with them to develop that expectation is key to developing a plan and a schedule. Next is focus. So we need to ensure that we're focusing on the things that we need to focus on and not be derailed on things that are um not as important and really are giving us noise. So as part of the focus is materiality. So don't sweat the small stuff, especially for a month end, chasing around um, for something that's not material and delaying getting the information out um, is something that um, accountants we tend to get that into a trap, and so really important um, to understand. Okay, what is it really material, and are we going to be holding back things because of that, or um, can we make that adjustment for $5 in the next period and get the information out to management in a timely manner? Next is revenue quality. So ensuring that what we have as our revenue is good revenue. So we're recognizing revenue for work that may be done that hasn't been built out because of the contract that we're following. And so therefore, we're not able to bill it out, but we've done the work, we've have the costs on our financials, but not the revenue. So putting a procedure for proper revenue recognition and then going through and making sure that we put in the accruals for that so that um, we are comparing month over month, year over year, apples to apples, and not having these roller coaster swings. Lastly, we want to have reliance in the financial results. So again, this is where we need to ensure that financial statements don't change. It, the first part of it is, we talked about materiality and don't sweat the small stuff. Um, in a part, this is part of that, where we want to ensure that what we get out is good for one, but two, that we're not going to have to go and change it and change those numbers once presented. So that's key, and that involves things like closing the period and locking things down so that once we have that, we make any changes in the following period. So once we know our focus and making sure that we get those parts in place, we then need to establish the procedures. What are we going to go and follow? What are we going to go and do to ensure that we are meeting our um, requirements, our objectives? So once we have our objective, then we need a plan and a schedule to meet that plan. So where do we begin? How do we do this? So, because it can be daunting. So, basically, we start off at um, building out the month-end closing plan around material balances. So, what are the critical assets and liabilities um, that we need to make sure that the transactions have been entered? Um, and what revenue and expense recognition do we have to put in there? What are the accruals that are absolutely necessary to give us good financial information? So we need to understand those parts, and of course, the standard things of our bank. So critical assets, well, certainly our bank, our AR. On the liabilities side, our AP, and um, you know tax payable, things like that, customer deposits. Uh, those are critical things. And on the revenue side, of course, we have um, our income, so our revenue stream, whether it's been posted or accrued for. And then on the expense side, key things such as labor expenses are need to be ensured that all payroll has been posted and in place. So once we know what are the key things that we're looking for, next is to focus on key processes and transactions. So what do we do? Are we using projects? Are we using sales orders? So most of our clients use projects, and so as part of projects, ensuring that we run project billing because that's what's going to drive our AR. But in order to do that, we need to ensure that we post time to be able to release. So time needs to be entered, needs to be released. Same thing with expenses at month end. Then those can flow into the project, so we can have billing for our time and material projects and have those flow through. If we don't take that step, in our process, in our workflows, to ensure those transactions are taken care of, we can't bill. So that means our critical accounts, AR and revenue, those will be incorrect. Next is the access to the financial modules. So remember, this is our plan and our schedule. So when do we cut off access to those modules? So billing, well, billing is going to be done as soon as month end is uh, been posted. Month end starts. So time and expenses need to be posted. And so how many days do we give to post that AR? Are we posting that revenue into the previous month? So are we running it for set month end? Okay, this is the time. Is that going to the previous month, or is that invoice going to be posted in the current month? That will depend on um, that process will depend on when you're going to close AR. AP, same thing. So at month end, do we have 3 days? Do we have 4 days? 5 days to post all the AP for the previous month before cutting it off, and then anything that was potentially missed is going to go into the current month, and that could be due to vendors not providing us bills, rolling back to what is material. Is there something that's material there that needs to be accrued for? But again, we need to establish a schedule so that after this date, this is what we're going to follow and move forward. Cash. So when do we reconcile our bank accounts and close off those transactions? So we're not doing any transactions in the previous month um, and locking that down. And fixed assets, running our fixed assets depreciation schedules for our assets, pulling in any purchases that we had made in the previous month for that would need to be capitalized, and running those and creating our fixed assets from them. What happens to other modules? So projects does not have a close. Maybe they say, well, projects are closed, but uh, closing off periods to AR means that we can't bill out anything, and in effect, invoicing to the previous month will be not able to be done. Releasing time to a period as we go through the month end process. Once we close off the month, then the time that may not have been released would have to be put into the current period. Inventory, for those that are actually running inventory, same sort of concept. Um, when is the cutoff for transfers and consumption of inventory? So again, key inventory for me is at month end. So if you've got any receipts, if you're doing receiving, um, any transfers and things like that, that needs to be done right away at month end and the previous period needs to be closed. So once we have a plan, we need to take that plan to um, to account. So we need to build a recurring schedule and needs to be repeatable month after month. So the schedule would list out a checklist, detailed steps to execute the plan, starting at 5 days before month end, all the preparation for the month end, and taking us all the way through um, to close. So for me, maximum 10 days after month end, we have everything's closed and financials are published, being that last step. So some some of you may feel you can do it in less time. Great. More time, not so much. We want to give timely information. That's why we're using the type of systems that we're using, tier one ERP systems, to give that information as soon as possible. So um, 10 days would be my max. And as some of you know, I've encouraged that really hard. Certainly all billing done in 5 business days, and should be no reason why you can't get financials out and locked down 10 business days after month end at the latest. It's part of the checklist. So starting at day +5, so 5 days to day zero being month end. What are the things that we need to do, and who are those individuals that are going to be responsible for it, and a way of having them sign off. Yes, this has been done. This has been done. This has been done, and as a team is going through and doing the different parts of it, having a sign off and having that visibility of okay, so this person's done this steps that can now do mine, etc. Once you have that, you need to publish that schedule. So uh, not only does the finance team know that's the case, but the company wide knows that. So um, this is not just a finance thing, but we are dependent on others. So managers, certainly the executive management team, but project managers, those that are involved in um, the approval and billing process, but also the individuals that are putting in their time. This is why it's important, because this is what we're striving for. So if you're not putting in your time for it to be approved and released, it delays it for everyone else, and that's not acceptable. And the company is following a certain schedule. Here's a schedule, and away we go. So once we have that schedule, um, what does this look like? So closing procedures. Okay, so closing procedures, close all subsidiary modules first. And then you got to complete your GL tasks, run the financials, and then close the GL. So let's have a quick look at this in Acumatica. Tired of me hearing me talk and looking at the screen. So let's pop into Acumatica and understand the pieces that are there. So in my finance workspace, I've got the ability to manage financial periods. So I'm going to open this up. And for me, I have a certain thing turned, I don't have centralized financial periods turned on. So I have companies, I can select for a particular company and go and say, for example, open a period in a year. So I'm in this year, Maybe a bit. Okay, so I don't have anything to open. Do I have anything to close? Yeah, so all my stuff has been opened. Um, so I can control it here. So in my action, so financial periods, I can control it. Now notice on the side here, I have closed in AP, closed in AR, inventory, cash, and fixed assets. So these are the different modules that I can control and close off, because each one is going to be at a different time. With in within finance here, when this says status open, but these are all closed, it means I can still post to the GL. Once I close a period, then that means the GL is also closed, which is what we want to achieve. So then finally we cannot post anything um, to affect our financial statements within each of our modules. So let me go into banking. So within here, um, under processes, I should be able to see closed financial periods, and here it is. So I can close these financial periods, um, but I also have the rights as a financial supervisor to reopen a closed period. So that allows us to, if we prematurely close and we find something that's material. So again, back to slide number 2 that we talked about. Important things that we need to put into place. Well, um, that is one. If we find something that's material and we have not published our financial statements, if we really need to bring that in, then okay, reopening a module is something that we can do if we have the rights. So reopen it, select the period that we want to open, go and make those transactions, and come quickly and close back up so that we don't end up with some rogue transactions also hitting what we establish as a closed period. So in each area under processes, we'll have closed financial periods. So now again, it's not just closed, we can reopen, etc. So that gives us the ability to adjust the workflow, to adjust what can be open, what can be closed, what needs to be remain open for transactions to still be made. So let's dive in a little further now into each one of the sections that we want to talk about. So the first one is closing procedures for AP. So what are the steps that we want to follow? So if we've got um, if we generate recurring transactions, so for things like for rent, for things that are pre-authorized debits from our bank, which could include auto leases and various other things like that, that is reoccurring, that's being billed out at on a monthly basis. We may or may not get an invoice for it. Generally probably do, but maybe we don't. And so to be able to capture those and having those in the system. Next is reviewing AP released documents. So unreleased documents would mean things that are bills, checks, quick checks, anything that we have transacted through AP that is on hold or is waiting for approval. We can't close that module if we have a document dated for the previous period, but is not open, so it's not released. So we need to go and review that to ensure that those are all taken care of. If we find that there's a document that's, for example, waiting for approval, and that's something that may take longer than someone may be on vacation, someone may be traveling. Hey, I can't um, close the period because of this transaction, well, then is it material? Is it something that um, we need to have in for the period that we're to close? If it's material, can we do an accrual? Change the date of the bill, make it so that it falls into the next period, posting it to the next period, so that way that does not affect our closing. Again, we don't want things to affect our schedule. Our schedule is set um, and needs to be followed. And so, just because a department head is on vacation or is traveling does not mean that we um, allow that schedule to drift. So once we have taken care of our unreleased documents, we want to ensure that we apply open prepayments and debit and credit adjustments. So if we've done some credit and debits and credits uh, in AP, or we've got some prepayments that we've made, but subsequently we've got the bill for it. So we want to be able to clear off those things so that our subledgers are as clean as possible. So when we do our check runs and things like that, we're not ending up with things in the way. Once we've done those, then we want to reconcile um, the AP subledger to the GL, make sure that our subledger matches with our GL numbers. If we've got foreign vendor accounts and we go through the revaluation process, we want to run that revaluation. Then we want to close our AP financial period, and then double check our reconciliation to ensure nothing's changed between the time that we've done it to the time we've pressed closed. So in the reconciliation process, we want to make sure that we're looking at things like accounts payable, one account or multiple accounts, and as well as deposits to vendors or prepayments. So if we've done our work right, then we've applied the prepayments that have been taken, but the remainder is still sitting there. Hey, we got to look out for that. AR. Okay, so similar um, process, and you'll find that I'm for the most part repeating myself, but it's again building out that process. We have all these steps on a schedule. We have people's names behind that schedule, and um, once we have that, then you know it's we're held accountable to it. So it's very important that we. So just like we did for AP, we may have auto-recurring transactions. So are we billing out to subsidiaries, for example, on a monthly basis for their share of the rent or certain expenses that need to be charged out that are repeatable on a monthly basis. So having those recurring transactions being taken care of. Next, again, review AR unreleased documents and then release anything that needs to be released because it wasn't. If something can't be released, then the discussion of accrue, move it to the next period. Apply any customer prepayments um, to invoices and also apply debits and credit adjustments so that we clean that portion up, especially for sending out statements. We want to make sure they are clean as possible. Generate overdue charges if that's something that you do. Once we've cleaned it up, run our overdue charges, prepare customer statements, analyze any deferred revenue. So have we captured recognized revenue that should really be deferred revenue, taking care of that. Revalue customer accounts, foreign customer valuation into our base currencies, and then close the AR financial period, reconcile AR subledger to the GL, accounts receivable and deposits from account, making sure that all ties. We want to do that on a monthly basis, so that we're not caught at year end. Why is the balance not matching? Cash, okay. We want to release any open cash transactions, having those pieces in place, importing bank statements if that's what we do, or if we're using bank feeds, running that through at month end to capture any last transactions that would have hit the previous period, reconcile the bank using the bank statements, and then close the cash financial period. For fixed assets, verify that transactions have been converted to fixed assets. So have we made any purchases that need to be capitalized in the period, in the previous period? And if so, then we need to convert those to fixed assets, create the amortization schedule, and run amortization or depreciation to get our values for that. So that step of bringing in the purchase transactions, it's important. Then once we have that, release all the transactions. So of what we've done, calculate the depreciation slash amortization, depending on where you are, and close the fixed asset module period. Once you're done that, reconcile the fixed asset balances to the GL, ensuring that those are all in balance. Inventory, release any open transactions, close the inventory financial period. Says FA, that's a typo. Should be inventory financial period. Reconcile the inventory valuation value to the dollar value sitting on our GL, ensuring that those are all in sync. What about projects? So most of you have the project module. There is no specific closing required. It's based on use. So this is where the workflow comes into play. So the workflow that we establish in our schedule for time expenses processing, running the billing, running allocations to capture our WIP, to capture our deferred revenue. And so taking care of those based on the schedule is extremely important. But there's no specific closings. There's nothing where you go in there and say close projects. Sales taxes. So this is done well past the closing um, of our financials generally, because usually our taxes are due either quarterly or monthly, but those would be done at the month at the end of the calendar month. So we post everything, we release our financial statements, and then we do the prepare of the tax report so that we can make remittances to the taxing authorities. So this process really is an outlier, but very important in order to file our returns to the taxation authorities. And finally, we have our GLs. So we need to prepare our month-end entries for accruals, for recurring entries. These are journal entries that we're making. So most of them, hopefully, we're doing through transactionally, but there will be a subset that will need to be done through the GL. And so having those prepared and ready to go having templates and things like that. Those are the things that we prepare day +5, day +4, etc. And then once month end happens, then we're just plugging in numbers based on how far we've gotten to be able to close those entries. If we've got, if we're running budgets and statistical ledgers, we want to make sure that we update those if as necessary so that our financials will be true. Um, verify that the subsidiary ledger transactions reconciliations are still good. So ensure the GL balances have not changed because we've closed the subledger and for example, AP subledger is closed, so nothing's going to go through the subledger, but someone could have an effect on the AP GL. And so ensuring as part of this process that, hey, I've closed that off, someone's done a reconciliation, is that still good? Has that number changed? So looking at those reconciliations and saying, yeah, has that number changed? No, we're good, this is good, we move on. Revalue foreign denominated accounts. So these are for our bank accounts generally. So unrealized gain loss, running that to have the unrealized gain loss so that our values at month end reflect our month end exchange rates. And then we run and prepare our financial statements, have a review, see any anomalies and try to provide commentary on those. Are there mistakes? Do we have to go back and make adjusting entries, or hey, this is what's happened, this is the reason for it, and analyze that. Once we're set, we close the the GL financial period and release our financial statements. So next, let's talk about month end versus year end. In a lot of programs, there's a stark difference between the two, where month end is, you know, within the year, but once we get to the year end, the year end closing actually does significant changes, moves balances into different tables, etc. With Acumatica, there's no difference in the process. The data is not moved to new tables. Opening balances are reflected without a special migration. So that allows, you know, the whole process. Once we've got month 12 um, done, then we're basically um, done year end, other than, you know, adjusting entries and some additional specific things. For me, if I'm following my month end properly, then I'm not scrambling to do some stuff at year end. Now, yes, there are a bunch of things that only happen at year end. Those, you know, will continue to happen. But if we are doing reconciliations on a monthly basis, then we don't have to panic and do it on a yearly basis and find, hey, I'm out, and then spend a whole bunch of time trying to figure things out. So doing things on a schedule means that year end is no longer this daunting task. You know, it's especially with those that have audits and things like that. Doing as much as we can month over month means that um, you know, year end, we spend so much time with audits that those are um, already in place, and we're um, in a much happier place. I'm not saying that's not going to be work. It's going to be a ton of work, but a lot easier, a lot less stressful. Revenue expense balances are set to zero for the first period of the new year. So that happens, and those transactions take place behind the scenes. So again, year end, month end, other than some extra work for year end for auditors, we're following the steps. Those steps should be the same, whether it's the 12th month or the 6th month. Okay, so that's all I have as part of um, this class. Again, did a lot of talking because a lot of it is theoretical. It's not so much what the system does, other than closing financial periods and things like that within the system. It is the discipline that we follow. So we talked about developing that discipline with in conjunction um, to what management needs and what their expectations and requirements are. Once we have that, then we take that and define our plan and put in a schedule. We look at things that are the most material, the accounts that we're using, and build our schedule around that piece. Then we reviewed closing procedures and talked about each module and closing those periods in those modules. We kind of look at it how we do that in Acumatica, um, and then talked about each of the specific uh, uh, AR, AP, cash, and fixed assets where we actually are closing. That also includes inventory for those that have it, and then reviewed other modules like projects and tasks that don't have a specific fixed closing where you actually close the subledger down. So for projects and taxes, we talked that that doesn't happen, but still needs to be on schedule because what we do there is affected by other things. And so we need to ensure that those things are either open or closed, depending on what's happening. Okay, so now we got a little bit of time for some questions. And I'm gonna go and have a look and see if there's any questions. Do have one question, AP. So what if I get an AP bill after I've closed off AP? It's not material for me to open up the period. How do I handle that in Acumatica? So good question. So, so I'm in payables and say I have a bill. So let me open up my bills and adjustments here, and let's look at a bill. So the process is what happens when I get a bill from a vendor um, that's for a previous period. How do I handle that in the system? How do I enter that in so that I'm not having to open a previous period because I want to catch that. So let's have this pop open. I haven't been on here for a bit, so it's taking its time refreshing. Here normally for this class I'm not in AP, so bear with me here. There we go. So I have, for example, this bill here. Let's see if they have any closed or on hold bill. So let me get rid of open or close and see if there's anything here. Not really. So let me remove the quick filter. And for demonstration purposes, I'm just going to take a copy of this. I'm going to paste one just so we can see it, but saying, oh, this is what we could do. So what do I have here? So here's my bill that I've created. The bill is dated to so February 1st, 2022. Sample database, so obviously it has things backdated, but it doesn't matter. So I have this date. So let's take this forward to current time. So we're sitting May 25th. So let's say we get something for April that comes in, and let's flip the dates, and I get an invoice for April 27th. Okay, so how do I handle that? So notice when I put in um, my invoice here, my posting period uh, also flips in, but I haven't closed that period, so I'm not going to see an error. But if that period had been closed, it would tell me, hey, I can't post in that period. So what can I do here? So there's a few things, and so the first thing is my date. So do I change my date to the first of the month? So um, that is a way of doing it. So instead of having 4/27, I'll put it as May 1st, so it falls into the current period. Or I can leave that as is and change this to period 5. So for financial purposes, it's going to go into period 5. It's going to give me a warning telling me that it's outside the date range that I've selected for the financial period based on the date that's been entered, but potentially that's the workflow that I want to follow. By keeping the original date means that my due date will also be based on that. And so if I've got 30-day terms, well, this is due on the 27th. Now, I've run AP departments in big organizations, and what we used to do was, our vendors knew in order to get paid in a timely manner, they need to ensure that they were invoicing us in a timely manner. If they were not helping us out in that sense, then um, we we would not just bend over backwards to try um, to appease their lack of urgency in terms of meeting our requests. So what we used to do was, okay, so I got this bill. It was for the previous month, dated for the previous month. I didn't get it on time. It's got to go to the first of the month. If it goes to the first of the month, means 30 days. You're going to get it a few days late. If they were really, not meeting our standards and received it on the 25th of May, that becomes the invoice date. They're not going to get paid for 30 days. Now, depends on the relationship that you have with your vendors. Remember, you're the customer. A lot of people, we bend over backwards to appease our customers when we're sending them invoices. Should be no different to our vendors who are, um, providing service to us. Uh, we tend to get scared in that. So changing the date, remembering that the due date would also change, but also note that just changing the period and keeping the original date allows us to see, hey, this is an older invoice, and we have that properly documented. So good question. So remember, posting period, adjusting that, and allowing that to flow through is probably your best bet. Okay, no other questions at this point. So let's take a last piece here, then we'll come back and do one last check here. So as a reminder, we have weekly training classes covering different topics that can be found at acumaticaengineering.com/acumatica-training. Had someone a couple of weeks ago say, the site is not on our website, so how do we find that link? It is for central nervous systems clients only, and so we have for our clients, we have reached out to the key individuals there, and they have access. They know what this site is, and they've shared that with their team. So if you're on here, obviously that's been shared to you, but if you feel that other people in your organization would benefit from joining us for these training classes, please do check with your organizational Acumatica lead and have those people in contact so they can join our training classes. So every class is recorded and available to you on demand. Again, asking the question on the AP question that we had there. Having someone join the class means that they can have their questions answered while it's fresh in their minds rather than looking at video later on. Sure, the videos are good, but the live class is even better. Uh, do check out our blog. Next week we've got approval maps next Thursday. So going through the basics of creating approval maps, and then CRM marketing. So looking at creating lists and marketing lists and going through that piece there. Okay, and then we have financial statements creation in the following week. So no more questions, and so that will be it for today. So thank you for joining us. Give you back a few minutes to you, and I know where to go. Okay, so thank you for your time, and we'll talk to you next session. Have a great day and great week. Take care.